And good morning, all you wonderful boys and girls. It is about 5:42 a.m. here in the desert Southwest Mountain Time, USA, on Wednesday, December 25th, 2019. And a Merry Christmas to those of you celebrating Christmas, and Hag Hanukkah Sameach to the rest of you celebrating Hanukkah. And I don't know of any other holy days people are celebrating this time of year. You know, I found out Hanukkah means dedication. It also means the festival of lights, or actually I don't think that's a translation of Hanukkah, but it is called the festival of lights. And this is interesting to me because, you got your Christmas tree, right? And it's got all the lights. It's like a celebration of lights. Then you got Hanukkah, which is a celebration of lights with the menorah, the candles that are lit, and so on. And I find a relationship with that because I happen to be a Baha'i, and Baha means light or glory. So we all got something in common here, and boo-hoo, I don't have any holy days until about the end of February. Yeah, and another little factoid I came across, Hanukkah means dedication. That's an interesting idea. So alright, one planet, one people. Here we go. We are talking today about fractional shares and basket trading, the optimal values. In other words, how many different stocks do you want to have in a basket trade? And hold on a minute, let us bow our heads and get with the warning here. Trading is risky. Risk no more than you can afford to lose or lose sleep over. Do your own due diligence and always use stop losses, not mental stops, but hard stops, hardwired into the trade. And God bless the lawyers. Here is your official legal disclaimer. Please pause the video and read carefully and cheerfully. So, back to our original subject, fractional shares and basket trading. What are the optimal values? How many stocks should you have in a basket? And this has come up now probably as an issue for a lot of people because recently more and more brokers are offering fractional shares. In other words, if a stock costs, say, $150 a share, you don't have to buy a whole share anymore. You can buy a fraction of it with certain brokers. And Robinhood is coming online with that. I happen to be number 250,000 something in line on their wait list. So you might want to get on that wait list. Last time I looked, it was up to about close to 400,000 on that wait list. Anyway, so how many stocks do you put in your basket? Well, you could put in, a dozen or half a dozen or 2 dozen, especially if you can keep track of them all in your head while the day is going on. Or you can set up bracket orders that will close them at what you anticipate to be a profitable exit, or it will stop your loss at a certain point. But it's easy to get kind of irrational about this and just throw everything in there and just hope you kind of average out. So I'm going to offer you some statistical measures for making that determination in a rational manner, I hope. And there are going to be those who are real statisticians who are going to take issue with some of what I say. But what I'm going to say is based on experience. It's empirical evidence of how this works because I have been there and done that in like 14 years, almost 14 years of trading. So I kind of understand how this stuff really works. So we want to begin with a couple of basic assumptions. Assumption number one is that you would not take a trade, or let me start with assumption number one is that you have analyzed your trading strategy and you have a very good idea what the win-loss probability is. The second thing we assume is that you would not take a trade where you have less than a 50% or 51% really probability of winning. 50%, that'll work. There are times, I admit, where less than 50% is a winning sort of strategy. That's a whole different set of cases. I'm just talking about where we flatten everything and all the different variables are more or less equal. So your risk reward would be 1 to 1. So you've analyzed it, you know the probability of winning, and you're not taking any trades where your probability of winning is less than 50%. Okay, that said, let's look at the numbers. First off, there's something to understand about the probability of loss. There's no such thing as a fractional probability of loss. If your probability of loss is that you're going to lose 1.2 out of 3 trades, then really you should assume that you're going to lose 2. And this is where I may have some comments from statisticians out there. But the way that I see this is that each basket trade is a universe unto itself. And you give the bias, because you're trying to preserve capital, you give the bias the benefit of the doubt to the losers. So if it's 1.2 out of 3 that you should be losing, you're going to lose 2, not 1.2. And that's the key to these numbers that you're looking at. And it turns out that the number of stocks to put in your basket, and in this case we're looking at where we've decided to put 2 stocks in the basket, the number of stocks to put in your basket is dependent on your probability of loss, okay, which is that yellow column on the left. And I also will show you what happens with a 3 basket and a 4 basket in a moment. The grayed out area here are those trades that you would not take. In other words, your probability is less than 50%. See in this left column, it starts out where your loss probability is 95%, and it goes on down right here it gets to 55% down here, and with that you're going to lose 2 trades out of 2 because it's 1.1 and you round up, not down. So in this case, you only start to see wins once you hit 50% and 50% probability of winning. When you have a 50% probability of winning, then it's going to split it, and you're going to win one and lose one. And I've seen this time and time again. At 45%, you still only win one and lose one. In fact, all the way down to where you have a 5% probability of loss, you still only win 1 trade, or you have a win rate of 50%. So you can see from this that no matter what we do in a 2-basket trade, it's going to take us all the way down to like where we're losing. Let's say your strategy loses 1% of the time, you're still only going to get 50% wins out of that. Now, if it gets to 0, then you're going to get 2 winners in a 2-basket trade. But a 0 loss probability, that means you've got a 100% win probability. That just doesn't happen out there. So you might as well assume that no matter what you do with a 2-basket, you're going to come up with 1 winner and 1 loser. Now, this does change when you get over into a 3-basket. Let me slide over and show you what a 3-basket looks like. That's not quite dragging it over there. Let's drag it some more. Okay. I'm going to put it like this. And so we've got your loss probability here on the left. This is a 3-basket. And you can see something interesting happen. When your loss probability drops to 0.3, in other words, 30% of trades in your strategy are losers, then all of a sudden it jumps up to where you're winning 2/3 of the time, or 67%. In other words, in a 3-basket trade, once you have a win rate on the strategy of 70% or more, then that makes sense to go ahead and use the 3-basket trade. Because instead of winning 50% of the time like you would in a 2-basket trade, you're winning 67% of the time. Now, in a 4-basket trade, it gets a little steeper, and you'll see the difference here. Here's a 4-basket trade, and you can see that it only makes sense to bump up to a 4-basket trade if you have a winning probability of 75%, and this says 25% loser right here. It only makes sense to bump up to a 4-basket trade when you're winning, when your strategy is winning at least 75% of the time. And so that would give you a 75% win rate on your trades. So I hope that all made sense to you, and I hope it's helpful, and I hope you enjoy your holidays. I'm Dennis at orangequant.com. Wishing you and yours a great holiday season and excellent trading in the coming year.